Did you know that over 40 million Americans are now independent contractors? That's more than the entire population of Canada. And here's what most people don't realize. Independent contractors have a unique advantage when it comes to taxes. Today we're unveiling the secret playbook that shows how independent contractors can save big compared to employees. If you're ready to discover tax savings for independent contractors, stay with us to the end of this video because you're in for a game-changing strategy, okay? Now let's get into the video. What's up, team? Welcome back to another episode of the Tax Huddle, where I'll be sharing some financial winning plays to help you beat Uncle Sam on the financial field. Now, in today's episode, we'll be discussing the differences between independent contractors and employees, and how independent contractors can save on taxes compared to being an employee. So let's huddle up and get ready to tackle the differences between independent contractors and employees. But before we break the huddle, make sure you hit that like button, subscribe to the channel, comment below, and most importantly, pass this to your friends, family, and anyone you know who's looking to level up their financial game in 2023. Now, let's break the huddle and dive into how independent contractors can save on taxes. Ready? Great. All right, team, let's discuss the key differences between independent contractors and employees. Now, on one side, we got independent contractors. These guys are like free agents of the business world. They're self-employed, they work on various projects, and really they run their own show. They've got the freedom to call their own shots, pick their clients, and handle their own schedules. And on the other side, we've got the employees. They're the ones who sign with the team. They've got regular paychecks, benefits, and a boss that calls all the plays. But when it comes to taxes, they've got less control. The team takes care of withholding those taxes from their paychecks, which might seem convenient, but it also means less flexibility when it comes to tax planning. So the IRS has its own playbook to figure out who's who. They look at stuff like who's calling the shots, how permanent the gig is, and who's supplying the gear. Understanding whether you're an independent contractor or an employee matters because it affects how you handle your finances. Independent contractors can tackle more deductions. Think home office costs, travel expenses, and equipment. Plus, they've got some trip plays with retirement plans, like higher contribution limits. Employees might have a smaller playbook, fewer deductions, and more limitations on retirement plans. So whether you're a free agent or part of a team, knowing your status is the kickoff for managing your finances like a pro. So stick with us because in the next section, we're diving deeper into the tax implication for both groups, and we'll talk about some tax saving strategies that can score big for your financial game. So stay tuned. All right, team, let's dive even deeper into the tax implications for both independent contractors and employees. We're going to use some real world examples to break it down. So imagine you're an independent contractor pulling in $60,000 a year. You're the quarterback in control of your financial game. Now, here's the play. You've got business expenses like home office, equipment, and travel costs that add up to, let's say, $10,000. Now, when it comes to taxes, you're not paying the IRS on your full $60,000 income. You get to deduct those business expenses from your taxable income. So you're only paying taxes on $50,000, which puts you in a lower tax bracket. And that's game changing. You see, the self-employment tax is typically 15.3% of your net income, which covers Social Security and Medicare. If you're paying that on $60,000, it's a hefty bill of around $9,180. But with those $10,000 in deductions, your taxable income drops to $50,000. And now your self-employment tax is 15.3% of that amount, which is about $7,650. Big difference. Now let's pivot to the employees. They're on the team. They're working hard, earning that same $60,000 a year. But here's the deal. Their employer's taking care of the taxes, and they might not have the same deductions to score with. Now, as an employee, you're not paying self-employment taxes, but your employer's withholding income and payroll taxes from your paycheck. These taxes cover things like Social Security, Medicare, and your federal and state income taxes. But it also means you're paying taxes on the full $60,000 income, leaving fewer opportunities for deductions. And that's the difference in the game plan here. Independent contractors have more control and can make plays to lower their taxable income and self-employment taxes. Employees, on the other hand, have less control, but the convenience of having a team take care of their taxes. Essentially, independent contractors earn their money, spend it on what they need, and then set aside a portion to pay Uncle Sam with what's left. On the flip side, employees make money, and Uncle Sam comes and takes his share, and then you spend money with what's left. So being an independent contractor can put you in a better position to control your taxes, take those deductions, and ultimately reduce your self-employment taxes based on your taxable income. It's like drawing up a game-winning play that puts more money in your pocket. Now stick around, because in the next section, we're going to be diving into some practical tax-saving strategies for independent contractors. We'll talk about making the right moves to keep more of your hard-earned money in your own end zone. So stay tuned, and we'll see you in the next quarter. All right, team, now it's time to talk about the game-changing tax strategies that independent contractors have in their playbook. These strategies can help you score big on the financial field. Now, the first strategy is deductions. Independent contractors, listen up, because this is your power play. You can deduct business expenses like home office costs, travel expenses, and equipment purchases. Imagine this, you're on the field, and you've got to get these deductions back in your pocket. Let's say you spent $5,000 on home office deductions, $3,000 on travel, and $2,000 on equipment. That's $10,000 in deductions, which can significantly reduce your taxable income. The second strategy is retirement plans. Independent contractors can set up retirement plans like a SEP IRA or a solo 401k. These plans allow for higher contribution limits and tax-deferred growth. So think about it this way. If you're making $60,000 a year, you can contribute a substantial portion of your income to one of these retirement plans. Plus, the money you put into these plans grows tax-deferred. So this is your secret weapon in your arsenal. The third and final strategy is tax planning. Independent contractors have more flexibility in tax planning. You can strategize when to recognize income and when to time your expenses to minimize your tax liability. Let's say you're on pace to have a great year and have some high earnings. You can plan to invest in deductible expenses or contribute more to your retirement plan to lower your taxable income. It's like calling the right play at the right time to stay ahead of the game. And speaking of planning, here's a crucial aspect that can save you a headache down the road. As an independent contractor, you don't have an employee withholding taxes from your paychecks. So you're responsible for making what are known as estimated tax payments. Think of these payments as your way of prepaying your federal and state income taxes throughout the year. So here's how it works. Step 1. You'll need to estimate your total annual income, including both your self-employment earnings and any other taxable income you might have. Step 2. You'll need to estimate your deductions. This includes business expenses like the cost of equipment, travel expenses, home office expenses, and any other deductible items. Step 3. After estimating your income and deductions, you'll calculate your expected tax liability. This is essentially an approximate of how much you owe in taxes for the year. Step 4. Based on your estimated tax liability, you'll make quarterly estimated tax payments to the IRS, and if applicable, your state tax authority. Now, these payments are typically due in April, June, September, and January of the following year. Step 5. To make these payments, you use the IRS Form 1040-ES. Now, this form does include a worksheet to help you calculate your estimated tax payments. It's essential to keep track of these payments and file them on time to avoid penalties and interest. Step 6. If your income changes throughout the year or you have more deductions than anticipated, you can adjust your estimated tax payments for the remaining quarters. This helps you avoid underpaying or overpaying on your taxes. By keeping accurate records, understanding the forms you receive, and making estimated tax payments, you're ensuring that you're staying on top of your tax obligations as an independent contractor. Plus, taking advantage of deductions and retirement plans is like crafting a winning financial strategy for your future. So, track your income, know your tax forms, and keep up with estimated tax payments to maintain financial success as an independent contractor. And remember, it's all about planning to avoid last-minute tax surprises. All right, team, so let's wrap this up. Independent contractors, you've got the tools for financial success with deductions, retirement plans, and tax planning. And let's remember those estimated tax payments for a smooth financial ride. But here's a little tip for our employee friends out there. You can double dip in the tax game by starting a side business outside of your regular job. We'll talk more about that in a future video. If you've enjoyed these tips and want to see more financial winning plays, please take a moment to hit that like button, subscribe to the Tax Huddle, and pass this video on to your friends, family, and fellow financial players. Until our next huddle, I'm your coach Ibrahim Muhammad. Take care.